Okay, literally stop what you're doing. If you own or even just watching Western Digital right now, you absolutely need to hear this. Last week, I ran WDC through 5 distinct valuation models and 2 legendary investor checklists. And honestly, what I found totally shocked me. See, the market thinks the AI hardware race is just about NVIDIA's processing chips. But guys, that is a dangerous and frankly costly illusion.
So, this brings us to the massive elephant in the room. Is Western Digital's recent 16% rally an actual generation-defining opportunity, or is it just a classic value trap? I mean, we all know that common fear, right? Buying at the absolute peak of a hype cycle, only to be left holding the bag when the market violently reverses.
Well, wrap your head around this staggering number, $27 billion. That is the sheer amount of value added to Western Digital's market cap in just 6 days. 6 days! To put that into perspective, they essentially materialized the entire GDP of a small country in under a week. It's kind of like finding a massive hidden gold mine tucked away inside a dusty server rack.
By the end of this explainer, you are going to have a clear, actionable framework you can totally steal to know exactly if WDC is a Warren Buffett buy, a Peter Lynch trap, or maybe something else entirely. So we're going to quickly walk through the 6-day market surge, unpack those Q3 earnings, dive into the AI storage boom, look at the tech driving the margins, the hyperscaler agreements, and finally the future outlook and risks.
All right, let's just jump right in with Section 1, the 6-day market surge.
The recent momentum here is just undeniable. Over this specific 6-day streak, WDC logged a 16.3% return. Now compare that to the broader market. The S&P 500 returned just 1.8% in that exact same window. But honestly, the real jaw-dropper, this recent surge caps off a massive 227% year-to-date gain for 2026. This isn't just a random blip, it's a massive acceleration.
But hey, stock prices eventually have to reflect underlying business realities, right? So let's look at Section 2, unpacking Q3 earnings.
The financial proof is literally right there in the top line. Q3 revenue leaped a massive 45% year over year, jumping from $2.29 billion up to $3.34 billion. That kind of accelerated growth, especially in the hardware space, yeah, that's exactly what forces Wall Street to completely reevaluate a stock.
Now, revenue is great, but profitability is where the story gets real. GAAP diluted EPS absolutely skyrocketed by 289%. And maybe even more critically, gross margins expanded by 1,040 basis points, crossing that magical 50% threshold to hit 50.2%. That right there, that signals immense pricing power and serious operational efficiency.
So as we digest these incredibly impressive financial figures, we really have to ask ourselves a fundamental question. How exactly are they pulling this off? We need to peek under the hood at the actual technology.
And that brings us right to Section 3, the AI storage boom.
See, the crucial missing link in the whole AI conversation is the infrastructure. As Western Digital CEO Irving Tan points out, virtually every single AI workload creates data that has to be stored persistently and cost-efficiently on HDDs. While everyone is hyperfixating on those flashy AI processing chips, all that generated data actually has to go somewhere. The insatiable data demands of AI directly require the cost-efficient, high-capacity storage that hard disk drives provide.
But it's not just standard run-of-the-mill legacy drives doing the heavy lifting here. Let's hit Section 4, tech driving the margins.
Western Digital is actively translating all that AI demand into highly profitable tech, and it's being led by Ultra SMR. That stands for Ultra Shingled Magnetic Recording. Basically, it's a software-enabled HDD technology that gives a 20% capacity uplift over standard drives. This is an absolute game changer because it offers high capacity at way lower costs, and it's already crossed 50% of their nearline exabyte mix.
And the crazy part is, they aren't stopping there. They are leaning hard into next-generation technologies for even higher density storage, specifically EPMR and HAMR. Just last quarter alone, they shipped 3.5 million next-gen EPMR drives, all while rapidly advancing their HAMR roadmaps. It's this constant, relentless innovation that pushes their cost per terabyte down, which, you guessed it, directly pads the bottom line.
But having the right tech is really only half the battle. Now we need to look at business stability in Section 5, Hyperscalers Long-Term Agreements.
Okay, this is where we really see that classic Warren Buffett economic moat in action. Check out this demand visibility. They have firm purchase orders from their top 7 customers through all of 2026. On top of that, they've secured long-term agreements with 2 of their top 5 customers through 2027, and 1 all the way out through 2028. These agreements specify exact exabyte volumes and pricing constructs that essentially protects them from the wild boom and bust cyclical swings that used to completely plague the hardware space.
To wrap up this explainer, we absolutely must look at the broader market horizon impartially. Section 6, Future Outlook and Risks.
The broader market is definitely taking notice of all this. Zacks Industry Outlook currently highlights Western Digital with a #1 strong buy rating. And this is all set against the backdrop of a super strong data storage industry outlook, totally propelled by massive global IT spending.
However, if we're doing a true deep fundamental analysis, we have to keep a balanced perspective. On the bullish side, yeah, you have this unstoppable AI-driven cloud storage demand and the rapid adoption of high-capacity drives. But we have to impartially weigh that against some very real bearish risks, things like escalating global trade tensions, potential supply chain disruptions, and of course, macroeconomic inflation that could seriously pressure IT budgets worldwide. So, as you process these staggering financial numbers, the massive leaps in hammer technology, and those rock-solid hyperscaler contracts, I want to leave you with this final thought. As AI infrastructure scales at a truly unprecedented rate, will the global data storage backbone actually be able to keep pace? Or is data storage going to become the ultimate bottleneck of the entire AI revolution? Thanks so much for joining me on this explainer. Keep questioning the data, and I'll see you in the next one.